Good morning, everyone. I'm Vince Lancy, and this is the Gold Fix Market Rundown. We have many topics to discuss today, and we're going to discuss them factually and in short order. There's the front page. Here are the markets. 10-year yields are up 1. DX is 98.25, up 6. The S&P 500 is 63.82, up 37.38. The VIX is 16.21, down 55. Gold is 33.77, up 8, near the high end of the range. Silver 38.26, up 45, near the top third of the range, was up about 60 cents. Copper 437 and change, unchanged bid. WTI 65.22, up 40. Natural gas 308, up 2. Bitcoin up 1,300. Ethereum up 150. That's 4% in Ethereum. Palladium up a percentage point at $11. Platinum down $8. Gold, silver down. Grains are all up. Wheat leading the pack. Okay, we had four. Now we have 5 topics. These are the 4 topics that we will be discussing in short order for everyone to get a handle on what is going on in the world. Current events, macroeconomic events, as well as secular changes in the market structure. Before we get into these 4 topics, which we will cover summarily, the Bank of England this morning just eased rates, citing stagflationary concerns. It's a surprise cut, I believe. I haven't looked at the details of it yet. I think it's a reversal of what they had said a couple days ago. The reason this is significant is because it's essentially kind of like an emergency change, number one. Number two, the problem with England right now, probably Europe in general, but England specifically, is they are going back and forth statistically between stagflation and not stagflation. So they've decided, as every nation that faces stagflation to do, to err on the side of inflation. We'd rather have everyone working than have everyone not working and have inflation. So the decision has been made. The context of that is there are implications for the U.S. So the U.S., it's going to affect the calculus of what Powell's doing, number one. Number two, that's one of the reasons the markets are stronger today. Interest rates, simply put, are lower in England. The pound gets weaker and people put their money somewhere else. Also, there are other bigger implications that perhaps this is the sign, this is the push that you need for the Fed to cut in short order. That's why the stock market is strong. So everything makes sense from what happened this morning macroeconomically. It also ties in with what we had said in our trade idea. And the trade idea is stagflationary news will be perceived as bullish for gold between now and August 15th when CPI comes out. The point being is if the Fed cuts, that's inflationary for gold. And if the Fed doesn't cut, that's stagflationary for gold. And until CPI actually comes out, there will be buying, nervous, and such. Now we get to the 4 topics to discuss today. Shanghai Gold Warehouse hits record. Fed openly discusses gold revaluation. Swiss offer gold industry in gold talks. And UBS raises the roof on gold demand. Let's start. First story, China's gold stockpile at the Shanghai Futures Exchange warehouses have surged to all-time highs, driven by aggressive arbitrage activity amid a speculative trading boom. Not so speculative. Over 36 metric tons of gold are now registered for futures delivery in Shanghai, nearly double last month's total. Traders are exploiting a premium in futures over spot. Despite weak jewelry demand, investment and speculative flows remain strong, fueled by low rates and ongoing economic and geopolitical uncertainty. The arbitrageurs are the bullion banks that are operating in Shanghai now. That's a knife in the side of LBMA. They know where their bread is buttered. Next, Fed openly discusses gold revaluation. A new Federal Reserve study explored global gold revaluation cases, highlighting risks, limited successes, and institutional objections, offered a muted critique of recent U.S. proposals. The Fed's review of 5 international gold revaluations warns that such moves offer short-term relief but fail to fix structural deficits. Germany and Lebanon face setbacks. South Africa's success remains uncertain. The report stresses transparency and implies strong institutional resistance, referring to the Bundesbank pushback back then, signaling probable opposition to U.S. revaluation efforts. Now, quick take on that. They're getting ahead of it. Somebody may be thinking about doing that. Maybe that's on the radar. Maybe it's going to happen in Europe, and so we're pushing back on it. The Fed, not we. The Fed is pushing back on it domestically. Maybe it's going to be introduced domestically. We don't know. What we do know is this. This is another snapshot of the Fed losing power. Terms like lack of independence, which I think goes to the political aspect of it, subordination of the Fed to the Treasury, which is something that's openly being discussed at certain banks, and the potentiality for something like yield curve control, which is, we're in the ante room for that already. And yield curve control necessitates cooperation between the Treasury and the Fed anyway. So long story short, gold coming back is a diminishment of the Fed's authority. Keep that in mind. Of course, they're going to push back on it. It's a possible eventuality. Next, Swiss offer U.S. its gold industry in trade talks. Facing a 39% tariff shock, Switzerland has offered to shift elements of its gold refining sector to the U.S. as part of emergency trade concessions, signaling alignment in the ongoing mineral war. Gold sits at the center of Switzerland's revised U.S. trade offer. With refining hubs under threat, Swiss officials propose relocating capacity to America. The move reflects growing U.S. demand, geopolitical alignment, and the disintegration of Europe's industrial advantage, one sector at a time. Full gold fix analysis below. Okay, to follow. We're going to have a big write-up on that later on. The take on that is gold isn't being tariffed. You don't tariff gold. Gold's money. That's the whole loophole of gold. You don't tariff also what you want to have come over here. And so the industry suffers somehow. They're tariffing the industry. So a concession will be to bring the industry over here. So this is all about the geopolitics of gold now. Gold, the supply chains of gold are going to move west as they're also being pulled east. It would leave Europe as a museum. It's also a sign that the euro dollar is going to be even less important than you think. The result of that manifestation in the market would be the EFP, which reflects gold spot in London, because London is the hub of gold spot. Forget Shanghai for now. And U.S. is a futures market. Well, U.S. always trades a little bit over in the futures versus spot. Spot's physical, futures is physical plus cost of carry, right? Well, that spread's going to increase. Okay, so if this were to happen, even if it doesn't happen, the contango is probably going to steepen on a permanent basis as a reflection of the bifurcation of gold control in the world. Long story short, more gold's coming to the U.S., whether directly or indirectly. And saying hi to Tom Luongo. The man was right about his European problems when he said it a couple years ago. And this is it. Like, this is funny shit. Excuse me. Anyway, next story. We're going to do a full write-up on that later, but I pretty much gave you the good stuff. Oh, wait. Is that the third one? Oh, the fourth one. The fourth one is coming soon. UBS raised the 2025 demand outlook as investment appetite surges. Now, that report will be going out at noon. Essentially, UBS came out with a report a couple of days ago, and the report said they weren't raising their price target, but they were raising their demand target for physical gold based on investment demand in ETFs. Now, this is very significant. First of all, it's significant because, wow, investment demand is really big. Second is jewelry demand is low, but I don't care about jewelry demand. Jewelry demand is being cannibalized by investment demand. And next, It also is the investment demand is offsetting central bank reticence. So there are rewards and risks to that. Serious implications for the gold market going forward as this type of behavior settles in. Investors buying, that raises the roof. Central banks not as aggressively buying, that lowers the floor a little bit. It's going to get wild. It could get very wild. So that's part of the important comment. It'll be out at noon. If you're a premium subscriber, it'll be in your email. It'll be emailed to you in a couple hours. We're not even going to go through the related stories. Summer lull today is what's today? Thursday. Wholesale inventories. Remember, the market is spooked, worried about stagflation. So if wholesale inventories come out showing a stagflationary vibe, well, I don't know what stocks will do, but gold should go up. And it should go up because, well, if we're worried about stagflation and Europe is easing, then we're going to ease. It's going to just show a leaning towards buying gold if it doesn't and buying gold if it does. Anyway, I think, who knows, but my position reflects that. Let's take a look at the charts. Oh, you've already seen that? All right, so we're going to keep it brief here. 4 a.m. gold gets slammed. I woke up during that. I was up early today. Wow. Okay, let's just go to the daily and not get too fancy. Bring out my trusty lines. Oh, I have a new line. Okay, so there you have. There's nothing really there's nothing, I can't make any more of this. We're in the middle of a range, okay? We're at the lower end of the higher end of the range. And there's my stop loss, and there's my partial profit target. I've already taken some off. Silver, well, what did we say yesterday? If platinum's up, everything else down, everything else up only makes silver go higher. Now, I know platinum and palladium are going to have their 5% moves, but silver is the focal point in the metals complex now. Copper's up, that's an excuse to buy silver. Platinum's up, excuse to buy silver. Gold's up, excuse to buy silver unless there's a big tariff announcement associated with it. So there you have it. And Bitcoin is up. Still in a range though. All right, that's it. I'm Vince. See you on the other side. Look for that news item, not news item, our breakdown of the analysis today at noon. We've already sent it to founders this morning. And look for a piece kind of summarizing a little bit more eloquently what we talked about just here. I'm Vince. That's the Gold Fix. Have a great